Good morning. It's Tuesday, April 2nd, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's surge in volatility. From the Sunday night open until Monday's trading range here, we saw about a $40 move in the gold market. Silver was up about 50, 60, 65 cents before briefly turning negative, and the dollar index punched to 4.5-month highs. So the question is, can precious metals hold on to these gains with treasury yields and the dollar index so strong? What I'll do is I'll look at some technical observations out there and set to measure and map how I would play out this market going forward because of the fact you have that surge in volatility, and then you also have these markets trading at the upper echelon of some of the recent trading activity. So defining my own risk parameters and eyeballing the charts, you really want to mind the gap on the gold market. So that gap from that Thursday close until that Sunday open is 2238.40. I think that could be your major first support zone. I think a lot of stop losses will be if it breaches into the gap, and I think there'll be a lot of buying going on if it does fill that gap. Your second critical level is going to be 2200. It's the psychological level there, and it also is going to be another line in the sand for many people. And then your third critical support on the chart, you look at the recent higher low and hook bottom, it's going to be 2270 down to 2265. So what could drive some of these levels here? We are set to have the JOLTS data come out, which could be a precursor to the payroll data that comes out on Friday. That's really the thing that I have highlighted in my notepad. And then also, we do have a handful of Fed speakers here today. Jerome Powell had that big speech on Friday. He really did push back on the interest rate cut scenario, and we're firmly anchored around that June meeting. So we'll want to watch any kind of changes in those expectations. Last I saw, we were sitting right around a 68 to 70% chance that the Fed does cut rates here in June. So getting back to the gold market, is really the central bank buying, the geopolitical safe haven hedge, and U.S. deficit spendings. That's some of the conversations that I've been having with many of the clients here. The central bank buying is they're divesting themselves, other foreign central banks, from holding other foreign FX products. They're seeing things like inflation really pick up in all these foreign currencies have really been declining. Just recently we saw the British pound and also the euro currency both go bearish trend against the dollar index. The Australian dollar also set off a neutral trend in the overnight market on my particular trading system here. So what it does is it tries to identify long-term trend changes in those markets, and then you can kind of see where things could play out from here. So central banks obviously want to get rid of some of these weaker FX partners or other FX partners that they're no longer actively trading with. They're also divesting themselves from the dollar index, seeing that this record U.S. deficit spending seems to be unsustainable, and they're questioning the integrity of the U.S. dollar index. So looking back at the gold market, I really think that the spec and FET net longs are going to continue to grow and should eclipse the 2022 highs, and most likely the upside target on the gold market right now, 2295 on up to 2300. If we do achieve the 2300, you'll see a lot of these larger banks and financial institutions, they'll start to take victory laps, as that was our upside primary objective for the end of 2024. So they're going to have to ratchet those upwards. So you're going to see 2,500 and even the 3,000 mark being set out there in stone. So looking at these other markets here, I want to push on to really 5 markets and 5 levels that I see value at. So again, on the gold market, I'm going to reiterate, closing that gap there, that 2238.40 I think is a good level here and is a longer term value for the duration of 2024. July silver up 72 cents, the low last night 25.19. Yesterday we were breaching in those 24s. I think 24.88 is really a critical level on the silver market. I think it's easy to have some kind of risk parameter down at 24.38, so risking about 50 cents there. On the Bitcoin contract, I think we've come down to a critical level of support right now, down 6% overnight at $66,250. I really think that that's good longer term value on the April contract. And then going to June on Ethereum, I think it's 3,500. On December, crude oil up $1.54 in the overnight, up 1.8%. I think your critical level on the December basis is going to be 76.50, where we see long-term value. May copper is going to be 398. Platinum is going to be below 900, which it was starting to approach. Now we're up about $19 here on the overnight session. So you got any questions, give me a call. I love to talk to you. You want to outline some of these levels here. I just broke into 5 different markets here that I see value at on the macro markets, but there's a lot of softs that are pushing up. There's a lot of the grain markets here that are giving us some good signals as well. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk loss. May not be suitable to all investors. Good luck, good trade.